Hello and welcome to the market update here for Tuesday, September the 6th. I apologize for if some of you try to join in the class on Thursday because I didn't have a class on Thursday. I forgot to cancel the class in the webinar, so it was sending out reminders. So I apologize for that. I did correct that this week, though. Again, this is the only class I'm doing this week. Still on kind of a working vacation, and so there won't be any class on Thursday. So I will kind of have a combined market update, stock-specific type class today. We'll go over some patterns and things like that. But you shouldn't get any alerts for Thursday. Make sure you don't show up Thursday because I won't be here. And then we'll be back to the regular schedule next week, Tuesday, Thursday classes, same time, all that kind of stuff. So we'll be back to normal then. It's just kind of that time of the year. The end of August, beginning of September, people in the markets tend to take vacations during that period of time. Another period of time when they take a lot of vacations is right at the end of the year, particularly the last week of the year, week and a half, so in that time period as well. So, and that's why you see a lot of low volume trading during that time in the markets, and it could be a reason why we haven't seen any dramatic market moves. I mean, we've been moving lower, but we haven't had any of the panic sell-offs yet. And now that we're kind of past Labor Day, that volatility could start to pick up. That's something we'll keep an eye on and see if that starts to take place. I don't have my slide here. For some reason, I wasn't able to pull it up. I don't know why, but my Microsoft Office wasn't producing my slide that shows if you have any questions during the week or any questions I don't get to in the live class, send them to Jerry, that's Jerry, @traderspro.com. I'll be happy to answer those for you. All right, let's get started with the update. Starting with the direction alerts, what's starting to stand out to me here, and again, most of these are going to be showing what we're looking for here is overbought or oversold conditions. Usually, when we're in the middle, it's not really telling us anything except for that we should continue in whatever trend we're in at the time, up or down. But we have been trending down, and we're starting to see momentum get. We're at the sell side here. Here's the extreme range. We're getting close to it now. Even when we get into it, you can get even more extreme. You're looking to get to the far left side of the box that really signals an oversold condition. So, how I would analyze this is that we could still see a further drop in the market. We could still continue to move lower, and one of the big reasons why I think we're still going lower is there hasn't been any sort of concern in the drop. The VIX, as we'll look at here in a second, is still relatively low, and the complacency is just still in the market. There's just not any fear, and that again, I sound like a broken record bringing it up, but over and over and over again. But it's one of those things that is a characteristic that you look for when you're starting to, if you not only just with the selling aspect of it, but to start to have confidence in buying. I don't trust any of these rallies because I didn't see the characteristics of that you'd see at the bottom. And so it affects everything. And I'm not the only one that is talking about this or that is recognizing this. Anyone that knows how to read a chart, has been in the market for years and years and years, is kind of looking for the same thing. And maybe that's why it just hasn't happened yet, is too many people are expecting it. And the market, again, what makes a marketplace is it doesn't allow you to know exactly what's going to happen next. And so this is why I always say that, you could come up with a system that works perfectly. You can come up with an algorithm that works perfectly at the time, and it makes it seem like you'll know what the market's going to do forever. but at some point in time, the market would change to where that algorithm would no longer work, or at least no longer work as effectively. So that's why I kind of discourage people that are trying to get on a lifelong pursuit to find the perfect computer model or mathematical formula that is going to allow them to be right all the time. It's never going to happen. And even if you invent something that would happen for a short period of time, the market would adjust and make it not work anymore. So that's why I teach people to embrace that uncertainty, to embrace the fact that we're never going to know exactly what it's going to do, and then embrace the subtle changes the market makes. And right now, so many people are looking for these same characteristics as we've seen them over and over again. I have to, at some point, think that maybe the market could be doing something different that is going to fool everybody. Now, I haven't figured out how that will play out. If I do, or if I recognize something, I'll point it out. But most importantly, I'm not trying to put so much effort into trying to predict something. If suddenly we start trending up and it doesn't make a lot of sense, but we're trending up, I'm going to trade that direction. I'm going to trade that trend. And that's really when you talk about being a trend trader, that's really what it comes down to. Is it comes down to just being flexible, focusing on what the market is doing rather than what you think it should do, and you'll be all right. And I think that's the best advice I can give you now is just don't get so locked into something and so locked into, you can make predictions again. I think predictions are important because they allow us to plan for possibilities. And again, I always relate this to game planning for a football game or something like that. You don't know exactly what the other team is going to do, but you want to be prepared for, hey, when they line up in this formation, typically they run the ball, or they run this play, or they do this, or they do that, so that you can be ready for whatever gets thrown at you. And hopefully you're able to, by having that preparation, you're able to come out successful because of looking at different possibilities. So I don't mind people making predictions or looking at what they expect the market to do. You just can't get so locked into thinking that it has to do it, or, you still, and really the damage is done when you stop, managing your trades, your account. The market can't be going down. It just doesn't make any sense. So you ignore your stops, or you just hope it just, eventually goes in the direction you think it's supposed to go in. That's where the real damage can really start to happen if you get into those type of trading patterns. So anyway, so momentum, it still could go. We are getting to that oversold area, but we're not in the extreme area yet. Brett, same thing. We're kind of still in the middle here. We're moving this direction, but it's still showing some room for drop. And then the breadth is not even into the high range. It's still in the extreme range. It can't get out of this extreme complacency. And at this point, I'm not even looking for it to get into the fear range, although I think it would get there if we started to really spike. It could get there very quickly. But boy, just to get into the trending range would be, for as long as we've been in this high complacency range, that would be a welcome sight to at least show that some fear is in the market, some concern is in the market. The buy-sell ratios, they're wide to the sell side. A lot of stocks have gone from holds to sells. But again, we've seen it a little bit more extreme at different points. And so, it could possibly get to that level. We'll keep an eye on that. Although one thing that is really, really shows that we're, getting in an oversold condition. If you look at the indexes here, we look at these periodically, but you look at these ratios right here. I mean, we're down to single digits. This is showing really extreme levels of oversold. A lot of stocks in the sell range. There's a Russell 3000. Only 77 of the 3,000 stocks are buys. 1,200 are sells. Now, there are still a lot that are in the hold range, and like I said, there still could be more that move into that before the damage is done or the damage is complete. But we're already getting into a range. And like I said, if the VIX was showing some fear and like it should be in this type of condition right here, I would be saying, hey, we need to start looking for some buys. This market has gone a little bit too far down too fast. We're probably going to rally here pretty soon. But like I said, it's hard to do that when we're not seeing the concern. You have this damage done, and still the market is not showing that concern yet. And I can't figure it out why. I can't put my finger on it, but I'm not the only one. Like I said, you'll hear this talked about on websites and financial TV shows, all the time. They'll be talking about these same things I'm talking about with you, because we're all seeing it, and we're all trying to figure out why that's the case. Why it's not. We're not seeing some of the fear that we normally see in some of the selling. And there's two ways to look at that. You could look at it as, well, it's about to come. We're about to have a big flush out day, which is starting to feel like that. Today was a good example of that, where we opened lower. It looked like we rallied all the way back. We were going positive. And then suddenly we're right back down at the lows. And it's just feeling like, the fingertips are on the edge of the cliff. They're trying to hang on, and we're about to plunge. But you could look at it another way, without the fear really showing up yet, that maybe, maybe we're getting ready for a decent rally. Maybe the market isn't prepared for that yet, for that drop, and it starts rallying again, kind of like it did a couple months ago, where it went into that nice little long rally there. So maybe we're going to have another move like that. Who knows? We'll look at some of those possibilities. We're going to look at the charts here in just a second. But I want to point that out, that this is showing some pretty oversold conditions. And we need to recognize that, because if we do start to see the market, showing some buyers coming in, we want to be able to pivot and try to at least take advantage of it. I'm still not in a condition right now where I want to really load up on trades, but we could start to try to participate in that rally if it starts to develop. All right, so let's get into the charts here. And you can see last Monday when we had the class, we were trying to rally, and we were up near the highs of the day, and I kept talking about a bullish reversal. But if you remember, you can go back and review the recording. I said, a lot could happen in that last hour. If we start fading from that, if we fade into the close, that'll be very bearish. If it holds where it was at, that would be pretty bullish. That's a bullish reversal candle. But that's why I like to wait towards the end of the day to make the decision. You don't know what the candle is going to look like until you get to the end of the day, because that's what it's showing you is that's the time period that we're observing for that candle. And sure enough, it faded into the close. Now, actually, sometimes this can be a modestly bullish candle. Sometimes what will happen at the bottom, usually you need to have a big kind of flush out type sell-off. But they call this an inverted hammer, although typically you would be right at you wouldn't have a tail at the bottom here. I mean, there's a number of things that make that less likely that was going to be an inverted hammer. Now, an inverted hammer is one of the weaker bullish reversals. And like I said, usually the body of the candle is going to be, you're not going to have any tail at the bottom there. but it shows that buyers were showing up. They just weren't strong enough. So you have this decline, and there's no buyers, and then suddenly you're seeing some life in the buyers right here. Now these always need confirmation. I would always wait for confirmation on these because they're not very strong bullish reversals. And obviously we didn't get that confirmation. It tried to open higher the next day and then dropped, and then we've been kind of dropping ever since. But that was a weak close that we had last week. Not surprising, we kept moving lower. Now we had a pretty decent bullish reversal candle on Thursday, and again, in the context of it, it was still possible this could be wave A, wave B, wave C. And so it made Friday very interesting. What was going to happen Friday? And Friday tried to open stronger. It gapped up at the open after the jobs report came out, and there was that possibility that gap could be at the start of maybe a move higher, move back up, and then it reversed. And so by the end of the day, it was showing it. So what the pattern here that we've seen now over the last week is that, yeah, we're getting possible bullish reversal candles again, albeit the last Monday was or a week ago Monday was a very weak one. If you're trying to call that an inverted hammer. But so we're seeing these attempts to rally, and it can't. It's getting crushed every time it attempts to rally. But that's why we're going to assume we're going to keep dropping because that's the behavior right now. Anytime the market tries to rally, we saw it today. It tried to rally off it opened lower, or it dropped early, tried to rally off of that, and then came all the way back down. We're down there at the lows again. And so we're assuming this is going to continue. And it's getting to the point where if you're trying to call this a wave C, it's starting to get to about that length of twice the length of wave A, and it's becoming less likely that that's a wave C. More likely that you're probably dealing with the wave 3 of a downward trend. Wave 1, wave 2, this is probably wave 3. We could get a little bit of a bounce, but it might be just wave 4 and then continue to move lower. So it's acting like it's eventually going to retest those June lows. And maybe that's where the panic kicks in. Maybe the market is just saying, this is just a normal. It's been a pretty orderly decline for the most part. Like I said, we haven't had one of those days where you're just like, I can't believe the market's down this much. It's shocking to see how bad how far it's down. That this day was a pretty big down day, but we haven't seen it. Usually you're going to have a day or two of that where it's like it's shocking how far and how fast we're dropping. We haven't seen that yet. So it may be that the panic selling, we get down to these lows, we break that June low, and now everyone says, oh, I thought that was the bottom, right? There's a lot of people that think that's the bottom. Maybe that's where the panic kicks in. So maybe we're just orderly until we get down to that point. And because it could be orderly too, you got to look out for these little bounces. But these little bounces should be setups for moves lower. And the way I might manage that in the portfolio is I'll have to see how those. We'll look at the portfolio here in a second, but I'll have to see how those inverse ETFs that we're using. They've made us some good money this last week for not doing a whole lot. We're almost up another 5,000 in the account. Really by just profiting from the drop. You could see me kind of jumping in and out of those. It looks like we could bounce a little bit. I might jump out of those and then re-enter them. But I would re-enter them on some of these rallies based on the fact that the pattern so far has been that we'll get an attempted rally we did right here, and then it should roll over and continue to move down. or last Friday we got an attempted rally, open high, gapped up, quickly gave it back. But that's the direction right now. That's the way it's acting. It's acting like it wants to keep going lower. You can see on some of these the Dow chart, you can see this is a much bigger drop. You know, if you're looking at, this is the start of a move up. This is a big, deep pullback. Typically, stocks will tend to retrace about 50% of their moves. You're getting beyond 50% here. And now it can go a little bit beyond 50%. So I'm not saying it couldn't be just a deep pullback right here and still could end up rallying up. But we're starting to get to that point where the probability of that is diminishing, and you have to recognize that. From where we're at right now, there's not a very strong probability that this is the pullback or this is the correction of this move up and that we're going to go higher. It's still possible, and so we still have to, respect that. But from a probability standpoint, not as probable as maybe it was last week. We're up here a little bit higher. That last a week ago, Monday, there your wave C, if that was wave C, it was about the same length as wave A. You're at about a 50% retracement of that move up. That would have been the more likely area for it to start rallying if it was just a correction within that. If that was a correction within the trend. If it was an uptrend, that was just a correction within that. So anyway, that's what I'm kind of observing here. Qs. You want to start to see, leadership from the NASDAQ in the small caps. We're not seeing that. In fact, we're seeing them down larger percentages. Bond market went lower. And, in the last update, we're still talking about, could this still be an inverse head and shoulders pattern? We had a couple decent updates right there. But especially with today's move, we've gone to a lower low. So this was just a correction then. This was a correction within the downtrend, and the trend is continuing lower. And so we haven't, during the last few months, actually, we were looking at the possibility that we were forming a little bit of a bottom formation right here, starting to possibly work its way back up. But obviously with today's move, we didn't bottom out. This is not the bottom. And so there could be more damage to come. You look at a little bit of a longer term chart here. And again, it made that, we were talking about lower highs, lower lows through here, and have a lower low right here. This was a significant lower high. We barely went above it, but then we reversed right back down below it. For the last several weeks, I've been talking about how critical this is. This would be a really strong sign if we got up above that's where you would really have confidence that you were in a bottoming formation, that the bond market was now reversing back into an uptrend, or at least more likely to reverse back into an uptrend. That was the area there that would have confirmed it. We never got it. And now today's move is confirming that we're still in this drop. We're still in the downtrend in bonds. I think that's important because I think we're going to need to see the bond market start rallying before we're going to see the market rally significantly. And it's just hasn't been able to do that yet. Gold continues to trend lower there. Now, oil's at a critical spot. One of the things I talked about in the last few updates is it could be that we're just going to stay in the sideways range for a little while. And now that we're at the bottom of that range, you got to watch to see if that holds. Now, obviously, if we break below this, then it means we're in a downtrend in oil, and this is a correction of this move down, and that we're heading lower. If it holds, again, like I said, it could just be that we're just still consolidating. We just kind of stay in this range. there are a lot of oil stocks though that have pretty decent looking uptrends right now. So that's why I tend to lean towards this holding as support and just maybe staying within the sideways range. But we'll keep an eye on that. Maybe in the next update. Well, we should see by the next update, because it's going to be next Tuesday. We'll see if it held right here and it's moving back up, or if it broke this. We should see one or the other, but that's what you're going to look for over the next week. If it, if it breaks that low, obviously it would mean that we're continuing a downward trend in oil, which could be viewed as being a little bit more bullish for the market. Take a little bit of that energy inflation out of things would definitely help. Dollar continues to move higher. Last update we were talking about, we were consolidating along this breakout area. We broke out above it, and we've gone even higher today. This is a little bit of a compact candle. As of right now, it looks like what we call a spinning top, which is an indecision candle. Could go either way. It could be just a pause to go higher, but a lot of times what you'll see is when you break out like we did here, you'll see it come back and retest the breakout. It'll come back here. What used to be the resistance, here was a ceiling. It broke out above it. Now it becomes the floor. So we'll keep an eye on that. The bottom line is, if the dollar does come down a little bit the next couple of days, as long as it doesn't drop down below this breakout area, we're going to assume that's just a retest of that breakout, and then it's still acting like it wants to go higher. So we're going to assume it's going to continue to go higher until we start seeing evidence of that it could be reversing that trend. But as of right now, it still looks like it wants to go higher. I just wanted to point out, though, that today's price action is more indecision, at least as of right now. Again, that could change going into the close, but that it's showing a little bit of indecision right here, which could lead to just a pullback. But I wanted to point that out, because if it does drop for a couple of days, that still would, the bullish trend would still be intact. We would just assume it's retesting that breakout area, unless it gets to that break area and drops significantly below it. One of the things you look for if you're looking for a trend reversal is, do you start to get more of an impulsive move down? This is more of an impulsive move up. Do you see it drop sharply and really drop back below that area sharply? It could be in a little bit of a trend reversal or a larger correction. That's what took place right here. You had impulsive up, impulsive down, corrective, down, corrective, down. It kind of reversed trend right there. So I started acting more like a downtrend. So if it's dropped sharply like this right here, then we have to look at the possibility that it's either in a larger correction mode or it's reversing its trend. But I don't see that yet. So we're just going to assume that trend's going to continue. The VIX. So, you can see that although we moved up a little bit, we had this little spike on that big drop a couple weeks ago. We've just kind of been consolidating. And, Friday we had the open. Remember, we gapped up at the open. The VIX gapped down, which you would expect it to do, and then it reversed right back up again as the market sold off. Today, same thing happened. We gapped down a little bit, but as the market reversed again, we're moving back up. But again, we're not seeing some of these big moves that we've seen with some of these previous sell-offs. So there's just not the concern yet. And if you want to look at, again, if you want to look at the VIX chart, since the VIX is not itself, you can't trade the VIX itself. You have to trade it through an ETF. That's why you can't pull up the actual VIX on Traders Pro. But I can pull it up on another charting service. I'll do that right here real quick. You can see, we're above 25, but 30 is kind of the level where this would be the level of concern, not panic, but fear. If it gets above 30, again, with this latest selling, we're not even in the fear range yet. 40 is where I'd say there'd be panic. 40 is up here. I've got that line drawn up there. And now you could look at this as we're building towards that. Here's the move off the lows, pull back a little bit. Here's the move up. We've kind of consolidated right here. We're getting ready to burst up. That's how I'm looking at it. That's why I'm leaning more towards a bigger sell-off coming, even though we're a little bit over getting towards oversold in the market. So anyway, we'll see. It still looks like it's leaning more towards that spike though. Chip stocks, we're looking for leadership here. Tried to have a bullish reversal candle. There's a bullish hammer right there, and it couldn't hold it. It gapped up on Friday and reversed. Now we're lower again. We're not seeing any sort of sign from the chip stocks leadership at all. Now, if we had a day like today, but we were seeing chip stocks rally or attempt to rally, that would change my mind a little bit. But that would maybe look towards a possibility that we could bounce or rally a little bit, but I'm not seeing that. Transports, same thing. Bitcoin continues to move lower. It's sitting at kind of this critical area of support, but I think we've moved below it today. Or maybe we're still right at it. This is not a real straight line right here, but we should end up breaking this low. We bounce alongside it right here, and we're likely to break and go lower. I don't think that's going to hold. And then the high yield corporate bonds, like I said, we're not going to look at this for very long, but the market's keeping an eye on this. You haven't broken the new lows yet, but you come all the way back down. It never confirmed the rally up through here. We had that bearish engulfing pattern that stepped this drop off right here, started that drop. And so there were some little clues there that were telling us. Now we could look for bullish clues. And again, I was looking at this on Thursday, had that bullish reversal candle. But again, like everything else, it reversed it on Friday, and we're seeing it continue to move lower today. If we start to see it jump up, maybe the market's not showing it yet, but we see it having a strong bullish day or move. Maybe we try to trade that bounce, but just not seeing it yet. All right. So overall, then conditions are still pretty bearish. We want to keep the hedges in play on the portfolio. We don't want to be jumping into too many things right now, and if we do, we want to stick to strength. So what is the strongest areas right now? Well, obviously oil is, but we look at that oil chart. We're trying to see if that's going to hold that support. And if it does, like I said, if it looks like it's rallying back up, this would be the area to kind of focus on, because this has been one of the strongest sectors out there. What's really done pretty well lately has been the coal stocks. So the CEIX right here is one. Consol Energy, 99 strength rank. Switch this over to signals here. Well, before I switch over to signals, you can see, has a little bit of a bearish candle today, so it could mean that it drops tomorrow. Again, assuming this looks the same way by the market close. So keep that in mind. Maybe it just fills in this gap right here, because this is very short-term in nature. It doesn't mean it's going to start a bigger decline, but it's possible. Maybe that's wave A, wave B, and you're going to have wave C that comes down a little bit lower here. But overall, what I liked about the pattern was higher highs, higher lows. You broke out above the range here, had a higher high, higher low, higher high, higher low, higher high. So far, you've got a higher low. You could take a pretty low risk. If you weren't overly concerned with your entry, meaning you're not trying to time your entry perfect, you don't mind if it pulls back a little bit after you get in. You could get in even on a day like that, but just put a stop down below this higher low right here, and you got a pretty small risk right there. But you could wait till tomorrow. You might get it. Like I said, if this holds like this, it's probably going to pull back a little bit further, and you might get a better entry, or you could get a smaller risk if you know. So if you had a little bit of a bullish candle down here, it dropped, but it gave you. It looks like it's going to close higher than it opens or something. You could get in, put a stop down below there, and you've got really small risk. If it drops below here, you'd want to be out. And then you could always get back in too, because that could be wave A, wave B, wave C. You probably want to have it show a little bit stronger buying before you jump back in again, but then you could put a stop down below there. And if it does do that, I'll probably point this out in a later class that, it probably would, if that is going to go into a wave C, it probably won't complete it in just a day or two, and we can talk about it next week. But that was one that that I like the overall trend, and again, it's been the sector that's done very well within energy. The natural gas stocks and the coal stocks have really outperformed. And some of the other ones in here you could consider AR 99 strength rank here, kind of the same thing. You got higher highs, higher lows through here. Had a pretty decent bullish reversal candle there. And, like I said, if you're not concerned with, having a strong day when you're entering, you could get in, put a stop right below there, or you wait for this to go back to a buy signal to give you a little bit of confirmation or something like that. You could look at this another way too, that maybe, this sell-off right here was pretty big and it went to a lower low right here. Could this just be wave A, and this is wave B, and you're going to get wave C coming down? Yeah, that's always a possibility. But with the way the energy stocks have been acting, they've been acting like they want to continue to go higher. You can see a fundamental reason why for them to go higher with all the Russia-Ukraine conflict, and we're heading into the fall and winter months, which will really test those European countries' ability to get natural gas and coal, and all these things are going to need to get through the winter. A lot of these trades are based on those prices staying elevated. These companies making a lot of money off of the shortages, and few more within the sector. If you're looking in the same sector here, like the CRK 99 strength bank, you're going to see a lot of similar patterns here. Now, this one just barely went to a hold. It's been a buy signal for a while, but again, you got higher highs, higher lows. You don't know if that low is going to hold. Maybe this is wave A, wave B, wave C. It comes down here a little bit further. At the very least, these are ones that you'd want to kind of keep an eye on, maybe put in a watch list. EQT, again, you're going to see similar patterns here. This one has, though, broken out. So it's if you're looking at, hey, these other stocks that I can't tell if this is wave A, wave B, wave C. Well, here's one that did break out, so this is confirming this is an uptrend. So maybe all those other stocks are going to follow the same path, give you a little bit more confidence maybe in some of those other patterns. We see some of these that have broken out. CHK, Chesapeake, where's that here? Oh, it's this one down here. So then I kind of went down the list, was looking at names that I recognize a little bit more. Chesapeake Energy is one. Again, this one is broken out higher there, higher highs, higher lows. And again, you could do an entry here and put a stop down below here. Give you a really tight stop, but or you could just wait for it to start to move back up again, go back to a buy signal or something like that. I'd still, if it did do that, I'd still probably use that as a stop right there, that previous higher low. And then CLR, Continental. This one is, again, these are all just similar patterns, higher highs, higher lows. And then aerospace is second on the list, and I'm already in NOC, Northrop Grumman, but that one still looks good if you're looking at a new entry into that. I like how this kind of broke out up in here. It's kind of pulled back a little bit. This is a key low right here. It's so far it still has a higher low. You don't want it to break to a lower low, but this is acting like it wants to continue to go higher. And then another one in that group, Lockheed Martin, LMT. Now this could be an ABC pattern right here, correcting this move up. I like how you had lower highs, lower lows, and then you broke to a higher high right here. So you're acting like you're possibly reversing trend. Now this one is one that needs confirmation. I wouldn't get into this one here because I don't have any, I don't know where I put my stop other than picking some random area down here. But wait for this to go up, confirm that there's a stronger probability of a bullish ABC pattern, and then wait for it maybe go back to a buy signal. You can get in, put a stop down below here. You also have the possibility of an inverse head and shoulders pattern forming right there, which is a bullish, very bullish formation. But yeah, this one needs some confirmation, but if you could get that, that's one that would be. I like that pattern if it can give a little bit of confirmation there. I like the reward to risk of a trade there if it can give you a little bit of confirmation. And then lastly, consumer staples. Blue Apron right here, 98 strength rank, APRN is the ticker symbol. A lot of consolidation in through here, back and forth, but had this little breakout move right there. And all that consolidation has been along that breakout point. You had the higher low right here. It looks like you got higher lows, higher highs right here. And then you're consolidating. Got a buy signal today going from hold to buy. I'd probably, if I were to trade this, I'd put a stop down below here. Because if it broke back below here, you probably want to be stopped out. If it can hold right there and move higher, it'd be starting to really take off. But that pattern looks pretty nice. And then one more, Constellation Brands, 90 strength ranks. We're kind of right at that borderline as far as strength rank. STZ is the ticker symbol. And probably needs a little bit of confirmation here, but if it can start to move up, you can see kind of this bowl-shaped move right here. It's one of my favorite kind of patterns to trade. You can see lower highs and lower lows as it dropped through here. Kind of had an even high right here, but then had a higher low, higher high, maybe an even low right here, maybe not quite, but then went to a higher high. And if it can start to move up from here, that's a higher low. And it's really could be acting like that uptrend, like it's reversing back into an uptrend. But maybe wait for this to go back from hold to buy would be good confirmation if you're looking for something real simple. But I like that pattern as well. Now, real quickly, portfolio. So we were sitting at about 125,000, I think, last week, somewhere in that range. We're up near 130, and a lot of that is just we're not giving up too much on our bullish stocks that we're in, and the market's been going lower. So these inverse ETFs have made us some money. So again, we only have 4 stocks. We have a ton of cash, but we're still making money and making decent money, just waiting for this market to bottom. But again, that's the whole point, is I wanted to teach you how you can use some of these strategically. You're going to trade differently when you're in these bear markets and downtrends, if you want to trade at all. I mean, you could just sit in cash and wait. But obviously, I assume you're here because you want to do something right now, and this is kind of what you do in these types of conditions, is you just try to grind out some gains, waiting for the market to bottom and waiting till you can deploy all that cash into a larger new bull market and make a lot more money over time when that happens. But we've been doing this portfolio a little over a year, and and much of that has been in decline. Since the beginning of the year, the market's been in decline, and we're still about 30% gain in the portfolio. I mean, there's a lot of fund managers that would maybe not give their right arm, but maybe their right pinky finger to get that type of return in a bear market. There's a lot of them right now they're just trying to show any sort of gain at the end of the year. And a lot of them are stuck because they could be only long. And although we're technically only long, we're just using these inverse ETFs to be able to profit. We can be long them and still make money as the market drops, and that's what we've kind of taken advantage of. But CNQ is down a little bit today. It could be, this could be wave A, wave B, wave C. I think the stop's down below here, if I'm not mistaken. Is it down below 50? Let me just double check that again. Yeah, 50. So, we're in this range where we're just letting it kind of figure it out. Now, if oil breaks that support, and it looks like, and we see we see a sharper drop in some of these. I don't necessarily have to wait for it to get to 50. If oil itself is really starting to drop, you're going to probably see a lot of these other companies pull back a little bit further as well. But I don't see any reason to do anything with this one right now. The other long one was NOC, and like I said, I still like this one. It's still trying to, on this little pullback right here, trying to find a little bit of support. It looked pretty good today at the highs of the day. It's kind of faded a little bit, but it's trying to hold right here. It still is acting like there are buyers there. Doesn't look like some of these other charts where they're in these stronger downtrends. It still looks like it's in an uptrend. So still hanging on to this one. And then our inverse ETFs, SARK, still going up. Although again, this was when it was down here at the lows, it came all the way back down. It looked like it was maybe forming a bearish reversal candle, and still you could kind of look at this as maybe a bearish shooting star candle formation. It did back here on Thursday when it looked like the market was going to rally or could rally, and it failed. It ended up, again, here's the gap up in the market, the gap down on this one, and then by the end of the day on Friday it reversed. So I'm still hanging on to these until I see a real strong bearish candle to get me out. Remember, I'm just trading the price action on these because these are just our hedges. We don't, we're just using when the market looks like it could drop. And again, I just went through the whole analysis that showed you I still think the market could drop further. Could bounce a little bit in the near term, but overall still would likely continue to move lower. So I definitely want to have at least some protection. Now, it could be I get out of one of these and just hold one as the hedge. So could it be that I hold SARK, or the SOXS is the inverse of the chip stocks. Now these, again, this looks pretty strong you know, it looks like chips are still weak. We already looked at that chart. SMH, you know, everything that we were looking at was showing that the market could continue to go lower. So I don't see anything there that I want to adjust. I was thinking about adding CEIX, adding another long position there, but I'm going to hold off on that because, you know, a lot of that came from earlier in the day when it looked like the market was rallying off the lows and coming back a little bit. And so, and it could still do the same thing at the end of the day, but rally up at the end of the day. It's just really not acting like it wants to do that. Now, I do need to pay attention that, on a couple things here too. This one's at the far right side of the extreme reversal risk. So this is very overbought, maybe meaning that in the next day or two, maybe we do see a little bit of a bullish candle on the chip sector. But like I said, it could just mean it rallies a little bit or bounces. Sometimes that'll happen. You'll get a little bit of a rally or a bounce. It'll push this back into the buy range, and then it drops again. It'll push it right back into the extreme range. But I don't want to ignore that. In fact, let me take a look at this on the other indexes as well. SPY, we're in the extreme reversal risk box, but the far left side would be oversold, so we're not quite there yet. That's kind of what we came from our analysis anyway. You know, we're looking like we could still drop a little bit further, but we know we could also get a little bit of an oversold bounce, but that bounce would probably be setting up for another move down. And so in other words, ideally, what if we can get a bullish candle, which I'm not seeing it yet, but what you might see me do, what you could do is if you're trying to mirror what I'm doing, and I'm not going to have another class this week, so I'm trying to talk you through some of the things to consider if you're trying to make your decisions. Is if you see a bearish candle on the SOXS or a bullish reversal candle on the SPY or something like that on the market ETF, you could get out of, like I said, either both of these or one of these, with the idea that you're out of them if it bounces, so you're not giving back money you've made. And then if it bounces and then you get a bearish reversal candle, you jump back in it again. And then if it has another big move down, you know, so in other words, if it bounces, you tend to hold that where you're at, around 130,000, and then you jump back in after the bounce if you can get a signal from a bearish reversal candle, and then the market drops again. These ETFs go up, and you get to 135,000 or something like that. You get a big profit there. The other thing you can do is just hang on to them, but you get a bounce, and what could happen is this could drop back down to 125,000, and then when it drops again, you know, it'll go back up to 130, maybe 132 or something like that. But if I could, you know, so you'll notice with these, I'm really just trying to read the price action, reading those candles. And, you know, if you haven't learned how to read those candles, go to the Traders Pro page on YouTube. Go to YouTube, subscribe to Traders Pro channel. There's a lot of trading videos there, and just find the candlestick patterns and learn about those and learn how to recognize those. And that's all I'm doing here is just basing, jumping in and out with these inverse ETFs. I'm getting out when it looks like the market could rally, and I'm getting in when it looks like it could drop. I'm just trying to see if I can squeak out some gains while the market is still dropping. That's the only objective here, is we're doing something at least to try to make some money while we're waiting for this bottom to take place. So again, you know, SARK, like if this really fades into the close, if the market rallies into the close and this fades down near where it opened, this would be one that I might just go ahead and get out of, and possibly the SOXS, because it could start to rally off or drop off the highs. But this one looks weaker than the SOXS, which is why I don't think the market's going to rally into the close. But if it does, then, you know, we might want to hold on to one of them. Maybe I hold on to the SOXS and get rid of the SARK. But we'll have to see. Just have to kind of see what it looks like at the close. All right. I can't think of anything else to add. Go back to the SPY chart just to see what it looks like here. Yeah, it's off the lows a little bit, but even if it didn't come off the lows and close positive today, because of what happened last Thursday where it reversed it again, you'd want to see another day of confirmation. You'd want to see it up the next day and close near the highs of the day. No fading at all into the close. You close at the highs of the day. Then you could maybe turn a little bit more bullish, but you would need confirmation. And that's probably not going to happen till later in the week that you get stronger confirmation that maybe we could rally a little bit. And again, like I said before, we expect a bounce. I don't expect it to last very long. Maybe it rallies up into, find an area here. Maybe right into here. You got support of this sideways range there. You have resistance of there, support of there. A little bit of support right there. It's near the drop of that day right there. So around that 407, 408 area. But then I'd be looking for a bearish reversal candle at that point to see if it comes back and starts to come back down again. All right, that's all I have. Have a great week. Again, anyone that joined late, there is no class on Thursday. We'll be back to the normal Tuesday, Thursday schedule next week. I did change the stock-specific class. I canceled it for this week. I didn't do that last week, and that's why it was giving you the alerts. That was my fault. Sorry about that. But I did change it, so you shouldn't be getting any alerts for a class on Thursday. No class no stock-specific class on Thursday. And like I said, next week we'll be back to the normal schedule. All right, thanks, everyone. And if you have any questions, like I said, I am on a working vacation, so I'm still answering emails and things like that. So just send those to jerry@traderspro.com. All right, thanks, everyone. Bye now.